Today, I'm going to be teaching my friend Jay how to actually trade options in the stock market. And by the end of this video, you'll be able to learn and apply this simple options trading strategy so you can start making money in the stock market as soon as today. Now, we're not going to be gambling like we did in the last video. We're actually going to be educating ourselves and learning how to properly go about trading. Are you excited?
I'm excited to learn. Let's get into it.
All right, let's go. Now, in the last video, we actually ended up hitting our analysis perfectly. So our trade plan, okay, would be, well, hey, we want to play this trend, continue riding this momentum back up into a new high at 78.95. AIG was the stock we looked at. And you remember, we essentially had identified the trend here. And in this case, what was the trend on AIG?
It was bullish.
Bullish, right?
Mm-hmm.
And so you said, hey, I think AIG is going to move back up to, at the time, and we'll put a screenshot of what AIG looked like when we were recording this video, but at the time, the all-time high was at 78.95. You can see right here. And AIG was trading around here, right? So we looked at the trend, okay, bullish trend. We identified, what are these called? These lines right here.
Moving average.
Moving average, or moving averages, right? That's all right, I'm quizzing you. But we only went over this once. So
yeah.
Remember, each moving average represents a period of time, the average movement of that stock over X amount of time. So for example, the 180-day SMA represents the average movement of 180 days on, well, this stock that we're looking at. And then the red line is the 50-day.
Yup.
And the blue line is the 15.
And then the green is the longer one. It's the 180.
Yes, the 180. Yeah. And I mean, it was great in the last video. You ended up making money, but that was kind of beginner's luck. But we can see now, just taking into account, like I said, the trend and then these moving averages, we were able to identify that this 180 days, what I like to call a respected moving average. So it is acting as a level of support. We've seen over the last 8 to 12 months, AIG has consistently been making those higher highs. You can see the candlesticks, higher highs, forming higher highs, all the way up into what was our all-time high at 78.95. We can see, maybe we got a couple smaller retracements below, followed with a remount of that area. Okay, so continuing this confirmation, validating this 180 day as a support area. And you were like, okay, I think based off of this, and obviously there's more I want to go into today, but based off what you knew, I thought, or you thought, and we both agreed on this, that AIG would move back up to that all-time high. And you can see here that this area, which would have been our take profit, where we would have closed out of this trade if we were in it, well, this ended up playing out perfectly. Okay, so AIG was able to move into that all-time high, 78.95, breaking it, and now is sitting at a new ATH or all-time high at $80. Okay, and this was our stop loss. Obviously at that time was where the 180-day SMA was trading. So that is moving up as AIG moves up. Make sense?
Yeah.
So you nailed that prediction perfectly, and that wasn't even using any what I call setups, which is what I want to teach you today. I want to give you one of these setups that I teach over inside my mentorship group. We'll cover more setups. You can kind of take that at your own time, in your own pace, but we'll go over this one setup today, which I refer to, or is called, the all-time high pullback, or the ATH pullback. What we are going to be looking for is going to be a chart that is sitting at its all-time high using the same time frame, so the 4-hour time frame, okay? Looking back over the last 180 days, that's the time frame we're doing all of our work on because we are swing trading, right? We're going to go through the S&P 500, NASDAQ 100, all these indexes, and just visually scan through a couple hundred charts, or however many we need to find a chart that is sitting at its all-time high. And then I'm going to give you a little checklist that we're going to actually look to hopefully check all the boxes off to determine essentially if we're going to take that trade or not. So this is a bearish setup, which means that when we identify this chart, we're going to be looking to go short. We're going to be looking to bet on the direction of that stock going down. Does that make sense?
Kind of, yeah.
So we're going to look for a chart here, and I pulled up 3 examples. Some of these may be a little more clear than others, but that's why we'll look at a couple. I would say example number 1 is ticker symbol LDOS. Now, what is the trend here?
It's choppy at the bottom a little bit. but it is going up.
So overall bullish trend, we agree on that. And then we can see here, we can look in a little closer. Well, what moving averages are being respected? Okay, so what moving averages are actually acting as support levels or resistance levels? And some charts, and it might be a little harder to tell, right? Some charts are going to be more clear, some will be more choppy, and so ideally we want to find very clear charts where there's a clean direction and trend.
I think this one's pretty clean.
It's pretty clean, yeah. I mean, the 180-day we've held above for the last 8 months, right?
Mm-hmm.
Plus, the 50-day has been, it was acting as a pretty strong area of support. Yeah, we did slightly retrace, but I mean, we're back above it. We rebounded. I mean,
it's really shot up.
If we look
right there.
Yeah, the immediate term here, you can see we're trading above the 15-day. And so with this setup, you can see that high 145.25 was actually just made today. So if we go over to a 1 minute, look at that, right? Literally 20-30 minutes ago, well, this stock formed a new all-time high on this time frame. Now what we're going to want to do is look to capitalize on a move off of that all-time high. Let's think about kind of the psychology behind traders and the market as a whole. When things are up, what do people tend to do?
Go in on it.
Okay, let me say this differently. If you bought in down here and now it's up here, what are you looking to do as a trader or investor?
Look to see if it is going to keep going up or down.
Are you going to want to take your money? Like if it's sitting up, let's say theoretically 5%, if your investment is up that much over the span of 2 weeks, it's sitting up at an all-time high. Don't you think a lot of people are going to be looking to close their positions and take profit?
Yeah.
Because, I mean, we can't see anything above here. This chart is sitting at its all-time high.
I'd get out.
What is here to tell us that it's going to continue going up?
Nothing.
Don't you think it would be like a safer, quote-unquote, safer bet? Or if you were in this trade to actually secure that profit?
Yeah, it would be.
Right? When things go up, and especially when there's obviously more volatility or very large moves on any stock, investors, traders that were on the right side of that move that made money are just going to look to take profit.
Yeah.
So that's
it's at its all-time high right now.
Yeah, so that's the idea.
And there's nothing else telling us, is it going to keep going up or is it going to go down? You would want to get out when it's at its high.
Right. That would be preferable if you were already in the trade. But we're not. But what we can look to do is capitalize on a move back down.
Yep.
So, I mean, you see, if the trend is bullish, and you look at a smaller time frame or 4 hour, you see we've got typically you'll see those lower lows and lower highs. In this case, higher highs being made, but after each high is made, we see a pullback. So we're just looking to see a pullback off of this all-time high. We want to capitalize on that move. I would say, looking at this chart, hey, if this thing gaps up anymore, and I actually created a tool, and I'll go ahead and apply this real quick to show you exactly where I look to close this. So it's just called the Daily Traders ADR calculator. This is on TOS. I'll apply this, and I'll put this in the description if anyone else wants to use this. This is a little tool I built, which is essentially going to give me, I would say, a realistic place at which to set my stop loss. So we're at an all-time high right now. If I set my stop loss right here on the all-time high, there's a good chance that this thing might probe up a little bit more, right, as it is right now. So today it might continue making smaller all-time highs, and if we just entered right now, we would get stopped out almost instantly. But what we can do is, using this tool, we could see projected movement. Okay, so we can see over the last 180 days, on average per day, LDOS from its daily high and daily low moves about 1%. Okay, and over the next 3 days, it is projected to move 2.87%. And that's not up, that's not down, could be either, right? Mm-hmm. That's just taking into account, like I said, the daily high, daily low on the 4 hour. So if we look at this stock, we could say, all right, so we've got about 1% average movement each day. I would say conservatively, and based off of what I call an average hold period, essentially just means on average, how long are you holding your positions? And for me, it's between 3 to 5 days. Well, when would we want to get out of this? I use the average daily range over the last 180 days on this setup to set my stop loss. So I would essentially go to drawing tools, and I'm just going to draw up 1% off of this all-time high. Okay, so you can see here, if we're trading at 145.24 and we just go ahead and we drag this tool up, we could see right there, 1%. See how it says plus 1%?
Yep.
So boom. Now let's draw a price level at that area. Okay, this level we just drew is 1% above where we're currently trading. So that, I guess, is like your area of error. Okay, if it gaps up a little today, if it continues pushing up, we'll still be in the trade. But if this thing moves up over 1%, it looks like, you know, we're gonna wanna get out. So this is where I'd set my stop loss. Now, I'm gonna make this for, you know, the visual purposes of this video, this is gonna be red, okay? So stop loss, that's where we're wrong. When we buy our option contracts, that's where we're getting out. Well, where are we going to determine where we're right? Do you have any idea where we would want to actually take profit? And look at this 3-day projected movement. Let's say our average hold period is 3 days. So we plan on being in this thing for at least 3 days, which is 2.87%. So about 3%. So let's look at these moving averages and let's set a realistic take profit. What about the 15-day EMA? You can see here candles, again, depending on the chart, this will be more clear or not, have continued pushing higher highs, but we've seen little pullbacks, retracements toward the 15-day EMA. Anytime we've kind of rallied, we've seen little retracements, pullbacks toward the 15-day EMA. Looking at the overall trend, and I guess what really is the pattern that we can see is that has been playing out many times on this chart. I mean, what do you think about looking to see a pullback toward the 15-day EMA and taking profit if we get to that level?
I think it would start pulling back a little bit.
Toward the 15-day?
Yeah.
So let's put our take profit just at or slightly above the 15-day EMA. Now, with this ATH pullback, the actual take profit, regardless, this is on our checklist, is going to be that 15-day EMA. So we're going to be finding, again, a chart where this stock, whatever stock, is sitting at its all-time high. We're going to use the ADR calculator to calculate the average daily range over the last 180 days. Okay, we're going to draw up 1% in this case, right? Whatever that may be, off of that all-time high. That is where we're wrong. And then where we're right, well, it's always going to be the 15-day EMA, but based off of your trading, your data, and we'll use mine in this case, our average hold period, we're going to look at our projected movement. Now, you have the option to change this 3 days, 5 days, 10 days, doesn't matter. You can change it within TOS. This is like this tool I built, right? We're going to see now whether that is a realistic target to hit in 3 days or not. So we're going to go to drawings, drawing tools, and we're going to go to trend line. Now we're going to draw down off of this all-time high, essentially drag this down, and we can see, okay, so our take profit is sitting what? Down. I'll drag it up. It doesn't matter. Either way works, but it'll be a little easier to see. Look at about 2.66% off of where we're currently trading. And if that take profit, okay, which is 2.66%, is within our 3-day projected movement, which it is, right? 2.88, 2.66, that is a realistic target to hit in the next 3 days. And that is going to be used so when it comes time to buy the option contracts, we're able to price in that move, buy the right contracts, and calculate using this tool within TOS, and there's another tool available that I'll give you later on. We're going to calculate how much we're going to be up, at which point we hit our take profit, which we're going to make green within 3 days. For me, like, that looks like a very good trade. We can just say, hey, when it comes to risk to reward, we're going to get into risk management. This is something that I cover in like great depth inside the mentorship group, and something that I just won't be able to cover in this series on YouTube because we'd be here for a long time. But we can look and say, okay, we've got about 1% to 1.5% to our stop loss, right? And we've got about 2.5% to our take profit. You know, we can say, hey, we're actually risking less than we're, well, in return going to make, which is good. You don't have to only take trades where there's more reward compared to the risk. You can risk more than you can make. It just comes down to risk management. But using this tool, we can see that's a very realistic target. And I built this tool because you'll see a lot of traders will set very unrealistic targets. Their targets won't get hit, and essentially their win rates will decrease. Because if we had drawn down to this 15-day and say it was sitting 10% below, but the 3-day projected movement was only 5%, well, we're not gonna move like 10% in 3 days if on average, you know, if the projected move is only 5. You get what I mean by that?
Yeah.
Realistic target, and then we got our stop loss set. That is the ATH pullback. I want you to essentially break this down. I've gone ahead and I found these 2 other stocks for you to break down yourself. So just tell me and I can draw everything out. Now, where would we set our stop loss? How would we go about doing that? If we see here on APH, the all-time high is 127.02.
If it is to go up, wouldn't we go up the
0.99 in this case?
Yeah, so we would just go up 1, right?
Okay, so let's drag up 1. Okay. So just about there. And you can see where that is, right? Here?
Yep.
Okay. And then we will put this line down. Okay. Just rough. We can make this red. Okay, that's where we're wrong. And then where are we right here? Obviously, I've identified the trend here being bullish, 180-day being respected, 50-day also being respected, 15-day in the immediate term being respected. And we want to see if we're going to plan on taking profit at the 15-day EMA, we want to see that the 15-day EMA is respected. Now, if candles were just trading on top of this moving average, then we wouldn't be able to use it as a take profit. But we could see, look at pullback, bounce off the 15-day, pullback, bounce off the 15-day, all-time high, and now look at pulling back. Let's take profit at the 15-day. Makes sense? Yep. So we'll draw our take profit, okay? And then we are gonna go and let's see if this is a realistic target to hit. 3-day projected move.
Okay.
Okay, and then drawing tools. And this is why I'm giving you a couple examples. So we'll draw down from that, drag down from where we're currently trading. Okay.
So it's
2.64.
Yeah.
So it's within our 2.96. It's less than. So I would say that's a realistic target. Yes. Good?
Yeah.
You want to do one more?
Why not?
And
yeah.
You could do this one yourself, okay?
Okay.
All right. Passing it over to you. I know you haven't used TOS, so I'll show you, but.
So we would want to go up. So this is the height.
And then you're going to click and you're just going to drag up. And
we want to go up 87.
0.87.
0.87.
Right about there. Okay, maybe you started a little high, but that's okay. Now we can zoom out here. Let's go to drawings. Let's click on drawing tools. Click here.
This one?
Yep. And then we can go ahead and you can zoom in. So click and drag left.
Wait, what?
Here, I'll do it for you.
Yeah.
You'll get more comfortable with using TOS. So this is going to be our stop loss.
Yep.
Okay, so then we'll make that red.
And
so stop loss up there.
Yep.
We see that. Now is the 15-day, and let's zoom out, go down here. Tell me here, what is the trend? Much choppier.
Jeez, yeah.
Yeah.
I mean, wouldn't this be bearish?
Well, let's look at our all-time low and all-time high. And remember, bottom left to top right is bullish. Top left to bottom right is bearish.
Yeah, so it's bullish.
Overall trend is bullish, even though it is choppy. 180-day, respected or not? Are candles trading straight through?
Yeah.
See the green line?
Yeah, it is.
So candles are trading straight through, which means it's not respected, right? Compared to the other charts where it was very clean and clear, where candles would pull back and essentially bounce off. That's not great because part of our checklist, and I'll give you this checklist after with all of this, don't worry. Part of our checklist is, well, we want to see the 180-day SMA is respected. We want to see the 50-day SMA is respected. Okay, preferably we want to see all 3 moving averages respected. And then we can see here the 15-day, because it is the smallest moving average, right, with the time frame of being the average movement over 15 days, you're going to look at the last 15 days and see if it's respected, in which it is. Okay, push, this would have been a higher high, pull back, okay, bounce off the 15-day EMA, validating that area as support, which means it's respected. It's done this multiple times. So what are we going to look to see here?
Go to the 15 days, right?
We want to play a move down to the 15-day EMA, which is going to be our take profit for this setup. See the blue?
Yep.
So we would set our take profit at or slightly above that area. Just double click it again, and then your level's set. Do this. Okay. Green. So now go to drawings. Let's choose trend line.
This one?
Yeah, trend line. And now let's click on the all-time high and drag down. So we want to see, based off our 3-day projected movement, 2.62, we want this to be within 2.62%. And if it's hard to see, you might have to do it backwards. So just do this and then drag up from the bottom. Yeah. Click it. You'll get used to using TOS. Drag up to that all-time high, a little more, perfect. Okay, what is this telling us? Is that a realistic target? If we're sitting 1.55 roughly percent off of our take profit, and our 3-day projected movement is 2.62, are we within that 2.62?
Yeah.
Yeah. Okay, so that is a realistic target. We've got 3 stocks, which we've identified what I like to call our trade plan. We've identified, well, where we're right, where we're wrong. And that is based off of, obviously, this setup and the checklist. Now would come time to go about actually choosing the option contracts to buy, calculating how much you're going to make or lose based off of if you hit your stop loss or take profit within that 3 days. And then if that aligns with your risk management, you're able to go ahead, buy those contracts and put on the trade. Make sense?
Yeah.
Which setup is your favorite? Which one out of the 3? So we got AEP, okay?
Not that one.
APH,
Either that one or the other one.
LDOS. These are very, very similar. LDOS looks the most clean.
Yeah, I was about to say.
They're very similar. Which one?
We'll do that one. We're on at the
APH. You want to trade APH?
Why not?
Okay, so this is what it looks like when you buy options on here versus Robinhood, which you did last time. We want to look up APH, okay? And now we can see the options chain for APH. We've got the expiration dates, which you learned about. So let's say, this is just theoretical for the example because mainly I want to show you how to actually calculate, okay? If you're right, how much you're going to make. If you're wrong, how much you're going to lose. So let's go with like the June 21st contracts. And we can see here we've got our puts and calls, and we're going to want to buy puts. Now, one thing I will point out right now, and I would actually go back and choose the other one because of this. Now, you can see under volume, there's a lot of NA. It just means there's no volume. There's no one trading these contracts. So I wouldn't trade them myself. So let's just go back and let's go with LDOS. So we're going to type in LDOS and okay, looks like here, same story. So one of the things with options, you're going to encounter this a lot where there's simply not enough trading volume, not enough trading action, not enough people trading those contracts. And that would just simply mean you can't trade that stock. I mean, you can, but you're gonna run into a lot of issues that we don't even need to dive further into. Let's check out AEP, okay? AEP. Okay, you can see there's more expiration dates, which is a good sign. Let's open up to August 16th. And there's still not a ton of volume. Let's look at the closer expiration contracts. May 17th.
Still not a lot.
There's still not a lot of volume, but I would say a little more than the others. So right now, you would have encountered a situation where, yes, we put in the time, we've done the TA, we've found these setups. However, if you were to try to get in any of these positions, you would essentially have a hard time getting in because there's no one to sell to you, right? Remember, it's a marketplace and you would just have to pay a little more or a lot more than you would want, and the spread, and we went over this in the last video, is going to be much larger. There's going to be a big difference between where sellers are looking to sell at and where buyers are looking to buy at, and that will create a lot of volatility where you might give up 10 to 15 even more percent of that contract's value simply on the entry. And so I want to still run the analyze tab, knowing that there will be a large spread because for the purpose of educating you and teaching you how to use it. So let's go to APH because I think that was our favorite chart. We'll go with the May 17th contracts on APH. Let's say, well, remember, in the money, out of the money. On Thinkorswim, blue is in the money, okay? And then this dark is out of the money. So in the money, out of the money, and that's puts we're looking at on this side. We're gonna look at trading some contracts. More than likely in the money are going to be, obviously they're going to be safer, but doesn't necessarily mean we have to buy them. Really, what is going to determine whether we want to buy these contracts or not, and we might have to run through several sets of contracts, is going to be how much we're going to make or lose. If we go to analyze add simulated trades. We're essentially going to simulate out this position. We're going to go the May 17th, 130, okay, puts. Okay, we're going to want to adjust this. Let's just say we're going to buy one contract at, let's see what price these are currently trading. 130. These 130 contracts are currently trading at 370. So the spread is 370 to 380. Not a huge spread, but still like no volume. Okay, we're going to go back to analyze, and let's say we could get fill at 370. So this is going to be the contract's price. We're going to buy one contract. This is a fake order. And then up here, this is where we're actually going to identify, or we're going to put at our stop loss and take profit. Okay, so if we go to trade, active trader, well, we can see here our take profit was at 123.67. So if we go back to analyze, 123.67 is going to be our take profit, and then our stop loss is going to be at 128.23. Okay, ready? 128.23. Now our optimal hold period is 3 days, so we're going to go down to date, and essentially this is going to tell us, and today is the, what's today's date?
The 8th.
The 8th. Okay, so today, 1 day, 2 days, 3 days. Let's say we get out by Friday. Now, what we can see here under P&L open is on Friday, if we hit our stop loss, we're going to lose $115. But if we hit our take profit, we are going to make $264. We want to figure out what the actual risk to reward is going to be. So do you have a calculator or your phone you can pull up? So what I want you to do is I want you to take 264 and divide that by 115.
2.29.
Okay, 2.29. So that means the risk to reward behind this trade would be a 1 to 2.29. So we're risking 1 part to make 2.29 parts. Okay, does that make sense?
Yeah.
So a 1 to 2 risk to reward, okay, or a 1 to 2.29. Based off of your desired win rate, without getting into too much complexity with actual risk to reward, and I really have simplified this because I know risk to reward is what a lot of traders struggle with, because you're looking at that number and you're like, is that good? Is that bad? Should I take this trade? Shouldn't I take this trade? I essentially built a calculator that is going to take into account the risk to reward, your actual account size, the actual cost of these contracts, the upside, the downside. It's going to take into account everything and win rate. And it's going to tell you, hey, can we take this trade or not? I want to wrap things up, but I will set you up with the calculator too, this risk management calculator. So essentially you'll just punch in these contracts cost, well, $370. The risk to reward behind these is a 2.7, and it'll tell you if you can take the trade or not. Super simple. Pretty much automated most of this because I've been trading for 7 years and I've found like the most time effective and efficient ways to go about this. But that's how you actually figure out, okay, that's the risk to reward behind these contracts. And then essentially the calculator is going to tell you, great, you can take the trade or not. And then here's how much, or how many, in this case, contracts you want to buy. And I'm just going to say this because this is very theoretical. Let's say, great, you could take the trade. The risk management calculator tells you to buy 5 contracts. We're going to go ahead and we'll just go to all products. We'll go to the live market. We'll go buy, and we'll buy up 5 of those contracts. And then under active trader, well, we're just going to be waiting, okay? As price moves, we can set an alert. We can right click, create alert, and we're going to click at or below and then create. And then we could go up here, can right click, we can create an alert, at or above, and create. And now you can shut off your computer. We're swing trading. We know this will take a couple days to play out. Let's say you've got your contracts on. You'll get notified on your phone once your alerts are hit. If that's, your take profit, great. You'll pull up your phone, you'll close that trade, you'll lock in, well, whatever the equivalent P&L would be. If you had 5 contracts, you would make 1.3K. So there you go. That's how to actually effectively go about trading options the right way, instead of just guessing like you did in the last video, as most beginners do, not knowing anything. And that is a strategy, one of these setups that I will teach you, obviously the rest in the mentorship group. I'll teach you the rest so you could go and find many opportunities, but that's one at least that you guys and you can go and start applying today in your own trading. Do you have any questions? I know that was a lot to throw at you.
It was a lot, but I I think I'm starting to get the hang of it a little bit more.
It's very systematic, and that's my approach to the market. It's all very, very, I think trading as a whole is systematic, and there's no emotion involved because of that, I guess, systematized way that we go about approaching markets. So hope you guys did enjoy this video. If you want access to the mentorship to learn how to trade yourself, click the first link in the description below. And I hope you're excited, because this is going to be crazy, right? If you can learn how to trade, quit your job, and do this full time, which is a dream for most people.
Yeah.
I know we didn't make money in this video. It would have been a little more fun.
Yeah, but no, it's good to know this information before I start and get into actually making money.
All right, I hope you guys did enjoy this video. Subscribe for more, and we'll see you in the next one.